Hello, hello, and welcome to the Wolf of DePin. I'm joined by my friend, co-host. No, you're the host of Wolf Crypto. I help you out on there sometime, but yeah, I'm joined by Mr. DePin, William from Wolf. How are you doing?
I'm doing good, man. I'm doing good. Markets, obviously treating us a little special today. Special, down, up, left, right, choppy, whatever you want to call it. But all in all, not a bad day. Just left. I think I told you this morning. Just left the ultrasound clinic this morning. Got to see the future. I don't know. We don't have the gender yet, so it could be my little girl or my son. Not too sure yet, but excited, very very excited. And yeah, so all in all, great day, man. Happy to be here.
Yeah, I would say congratulations, but I think I've offered that many times. But
Yes,
yeah, it's exciting.
it is. I'm gonna
And
get them on DPIN day one. That's
oh,
my goal. I'm
100%.
gonna attach a node to them immediately.
Yeah, it'd be interesting. I mean, we can dive straight into Deepin. I think Deepin is one of those that's a really interesting topic for me because I sort of know about like the infrastructure element, particularly sort of in telecoms from a previous life. However, Deepin has just been a category that I've traded. There's products and there's like products and tickers I like in it, but as a trader more than an investor, I've never really delved into like some of the underlying use cases, but I'm aware of sort of the future of like physical AI and robotics, etc. But I think it would be really interesting to dive deeper into it. Yeah, it feels like a bit of a Pandora's box.
Yeah, it's so DPIN's interesting. So people, what they'll do is they'll like take the word DPIN and they'll try to like make some definition out of it. And there's a lot of different definitions of it. Some people even call Bitcoin the first DPIN if you want to get like really technical, because technically it kind of is. Like
Yeah.
you incentivize people to build out a network, like a physical network, by giving them tokens, paying them in tokens. So Bitcoin does that. They built out the network, they pay them tokens, aka Bitcoin. You can mine the Bitcoin, so on and so forth. But the way I differentiate when I talk about DPIN, I'm not talking about just a standard network like that. Like I'm talking about a network that, and a lot of people in the field right now, when they mention DPIN, are talking about a network that provides an actual service that you then are rewarded for said, for providing said service. So for instance, you have Helium, probably the most well-known one.
Yeah.
We had Xent on today too on the space. But you have Helium, which essentially I, as a Helium node operator, am incentivized to purchase said Helium hotspots and then install them at places where I know they'll be used. So like really busy places, because AT&T and T-Mobile offload their data to the hotspots, and they paid Helium for that, and then Helium pays the node operators for that via the token. And so it becomes this like really cool flywheel effect where you have a service that's needed, you have someone who provides a service, they get paid for it. The people who basically sold you the equipment, they get paid because they bought, you sold the equipment, or sorry, you bought the equipment from them. But they also take a portion of the revenue that's earned by the network, and then they, so on and so forth. So it becomes this like crazy circular flywheel that just like spins upward. And that's essentially what DPIN is in a nutshell, using Helium as a primary example.
Yeah, it's interesting. So outside of Helium, what other sort of use cases are quite prevalent in Deepin on that flywheel, and where do you see potential future opportunities?
Yeah, I mean, honestly, there's so many. There's some that we don't even know about yet. Like, honestly, there's just so many. The most popular ones, I would say, right now, obviously, telecom. Mentioning Helium, but then there is oh my god, I almost blanked. There's a really popular one called GeoDnet right now. I don't know if you know what GeoDnet is. It's GEOD is the token.
I've heard the ticker. No, I
Yeah,
don't
yeah.
know what it
So
does.
GeoDnet, what they do is they're essentially helping GPS be more accurate. Like they're building a GNSS RTK network. It's a real-time kinetics network. Kinematic, I think the K might be, but I'm probably butchering that. Anyways, what they do is they incentivize people like myself, and they say, "Hey, William, buy this node from us." And the node is a device that essentially acts as a middleman between anything that's trying to ping a GPS to the actual GPS satellite. Because the problem with GPS right now is that it's not as accurate as it should be. And in a world where you have a lot more autonomous vehicles driving around, you have AI becoming more prevalent. You need those things to be extremely accurate. You don't want your self-driving Tesla to just drive, 10 meters off course, right? because
Yeah.
GPS was lagging. And you've seen GPS on your phone before, right? Like
Yeah.
sometimes your icon is like way off, and you're like, what the hell, dude? And so what GeoNet does is it fixes that by creating a network of middlemen that ping those devices and essentially provides centimeter level accuracy. So as opposed to meters accuracy, like like in that the Tesla example, I said 10 meters off, 5 meters
Yeah.
off. You have 1 centimeter off or 2 centimeters off, as opposed to 2 meters, which is a huge difference. So that's just one use case. All those companies that need that service then pay GeoNet for the service, and then GeoNet pays the node operators accordingly. So again, another flywheel there. So that's just one extra use case. You also have things like Nadix, Alki, all these AI ones that are basically helping train AI. They're training physical AI by incentivizing people to share their cell phone camera data. So like I'm filming while I'm driving on my phone, and Nadix takes all that traffic data that it's collecting, all my driving data it's collecting, and sells that data to companies like Grab and Lyft and all these like rideshare companies, so they can use it for their autonomous vehicle programs. And so that data is extremely valuable. And in Alki's case, Alki's helping build a network, a perception network, essentially training AI to understand the real world around it. And you wouldn't really think that's super valuable until you start breaking it down, and you're like, wait a minute, like robots have no idea what's going on around them.
Yeah.
How do we do that in a privacy preserving way? Oh, we can incentivize people to install these QR codes in their buildings or in their business places, their commercial business places. And you utilize these apps that we build to help train the AI that they're going to eventually buy these robots, and these robots will then be able to navigate the store appropriately. So that's just AI use cases there. There's also aviation and weather. So you have a company called Wingbits. That's Bits. It's Wingbits. Their token Wings is coming out pretty soon. Aviation. You wouldn't believe how large the aviation tracking market is, because people don't think about like tracking flights, and how difficult that is. But apparently, it's extremely difficult. The aviation industry has relied on the kindness, the charity and kindness of flight enthusiasts since like the 1980s. And so essentially the aviation industry, along with a handful of companies, they've purchased this. So not purchased, they've stolen this data from. When I say steal to be like dramatic, but like obviously there's a trade-off. They took this data from these flight enthusiasts who basically were told to install these antennas outside of their houses, and they said, hey, we'll give you access to this cool map, this cool like aviation data map if you want it, in exchange for all the data you're feeding us. And all that data is worth like $20 billion, like annually, like billions of dollars. And the people providing the data were getting paid shit. Like they're not getting paid anything, bro. They're sitting there like, oh, I get access to a map, cool. Where now with Wingbits, you're getting the same data, better data, cleaner, more efficient data, because now they're incentivized through token payment, to install these things and do it the right way. So you have to install it correctly, of course, but also you have more. You're going to get cleaner, more efficient data, but you're going to get more of that data because now you have a network that's scaled out. Like instead of just having a couple of antennas here and there, you now have 20,000 antennas, 40,000 antennas, 60,000 antennas. And so the network becomes inherently more valuable because of that. So there's just a handful of examples. I could probably go on and on this entire stream talking about different DePin projects. So I just wanted to let you kind of give you an idea of how varied the DePin sector is. It's not just like one single thing. It's not just helium. No. It is a multitude of things.
Yeah, it's a layer. It's a lot of different layers. I find it really interesting because obviously I think from sort of the monopolistic point of view from infrastructure is it tends to be the build out's really slow, and I think that's inhibited a lot of the innovation. Certainly, of the application layer on top, it feels like a lot of these DePin projects are trying to bridge that gap and almost sort of add a little bit more impetus to get the infrastructure in quicker, to then allow more to be built quicker on top on the application layer.
Yeah, you can scale faster with a DePin. That's the whole thing. Is like I can build a network quicker and more robust than something that currently exists, and that's why companies like AT&T are jumping jumping at the chance to use Helium because they're like, oh my God, like this network's being built out exponentially faster than anything that we could build out. And it's so much cheaper for us to just use theirs instead of building our own. So
Yeah.
yeah, it's just a win-win for them. Like they save money and they get a kick-ass network to use.
Yeah. And in terms of the build out of the network, then how, from a telecoms perspective, sort of relating it to that, is how does that work? A, from sort of a regulatory point of view, and B, like, are you putting them in places that there isn't a hotspot, or is there places where the signal isn't particularly good, or is it places where there's a lot of traffic in and the signal probably isn't good enough in its current form?
Yeah, you're putting it so in Helium and XNet's case, your goal is to put it in high traffic areas where there's lots of people using cell phones because cell phone towers, I mean, you've worked in telecom. Cell phone
Yeah.
towers are very expensive, they're bulky, they're really cost intense in terms of maintenance. And they just take too much time to build and you can't build new ones really. Like you can build new ones now, but like it's not as feasible, Like a network's already kind of been built out. They're trying to add new features to it. Allow more bandwidth to be, onboard to these towers. But the reality is you're going to have an increase of data usage over time exponentially as more and more people buy phones, more and more people are consuming more and more data, you have population increase, so on and so forth.
Yeah.
And these towers can't handle all of that. They can't handle all that increased growth. And so how do you then service all those people and provide them adequate cell phone data? Well, you can use Wi-Fi.
Yeah.
Okay, perfect. So how do we ensure that there's adequate Wi-Fi installed everywhere? Oh, let's pay people to do it, and that's where Helium comes in. So I think that when you have a use case like that, especially in telecoms, and you have an easy understanding of, hey, cell phone service sucks in here, and there's a lot of people inside this building, I can make it better by installing this hotspot, this unit. Clear use case, people understand. Hosts are more likely to let you install that thing, and then bam, you guys both make money. It's pretty straightforward. It's not like this crazy complex thing where I have to like explain liquid staking protocols or like LPs to like a host and go,
Yeah.
hey, so you're gonna arbitrage this trade right here, and then you and I are both gonna make money. They're like, what the fuck, dude? No, I'm good. I just say, hey, cell phone data sucks in here. I can make it better. We'll both get paid. And they say, oh shit, deal, count me in.
It's quite interesting. It's certainly something I look into. The UK has a very weird telecoms market because you bid on bandwidth, and
Yeah,
it's all
you do that here too.
Yeah, spectrum bids.
That's why Helium went with the Wi-Fi route because so you have another DePin out there, World Mobile. They purchased their own spectrum, I believe, or they actually bought their own spectrum, so they're using a spectrum. But beforehand, Helium, they had a thing called CBRS. They would use CBRS radios. So essentially, that was like an actual mini cell phone tower, lots of range. One, they're bulky. Two, they're expensive. And three, the handoff from CBRS wasn't as clean as it is with Wi-Fi. So if I'm a customer, an AT&T customer on 5G phone service on a tower, and I walk near a CBRS radio, the handoff, like the switch over from the tower to the CBRS radio, was not good. It wasn't like seamless, It wasn't instantaneous. It took a little bit of time. It was laggy. It was janky, and so like these telecom companies were not down with it. They're like, hey, we don't want to do this. Like it's providing a bad service for our customers, and a bad look, if you will. And so Helium went the route of doing Wi-Fi because Wi-Fi is an unregulated spectrum. It is not a regulated spectrum band. So yes, it has shorter range, but the handoff from 5G cell phone data to Wi-Fi was extremely seamless. It's almost completely seamless. So AT&T and these guys are like all about it because that makes way more sense to them. They don't have to hire a dude to go install a bunch of Wi-Fi hotspots and pay him a salary and benefits and all this stuff and be liable for all this equipment. I, as a DePin deployer, take on all the liability. I purchase the hotspots. I make the contracts with these hosts. I'm doing all the legwork for them, and they pay me for it. But obviously, it's not as much as an employee would make. But like, still, it's enough to incentivize me to do so.
Yeah. And in terms of the units, then what I'm curious of, what do they look like? Are they?
Oh, I have one right here. Where is it? I have to bend down to grab that thing. Yeah, here. I got one right here. So there's a couple things you can do with Helium. Like you can do this thing called brownfield conversion, which is you can just take existing Wi-Fi infrastructure and turn it into a Helium hotspot, but it has to be a certain grade, a commercial grade.
Yeah.
So I also have an XNet unit too. I'll show you. All right, so XNet does more of like the flashing of existing hardware. So like this is not an official like XNet unit, for instance. This is an Alta unit. It's called Alta Labs,
Yeah.
but it's flashed with XNet software. So this one is like an enterprise grade, commercial grade, can handle lots of different connections to it, and has a really wide range. I will say with Helium, the hardware is a little cheaper, but it still works very, very well. So you have this thing right here, Helium hotspot.
Okay. Yeah.
Yeah. It's a little $250 device. Nothing insane. I would say the Alta device from XNet's like 260, maybe 230. I have to double check. But yeah, the Helium hotspot itself, indoor hotspot, $250. Can handle about 100 connections at the same time simultaneously. So if you have a really busy spot, barbershop, nail salon, bar, anything like that, the Helium hotspot will work just fine in there. You know, it'll take AT&T and T-Mobile traffic as well as Helium mobile traffic, and offload it.
Okay, very interesting. Yeah, I think then from that sort of DePin point of view, I'm quite interested which sectors of the economy and businesses do you think will be most exposed outside of telecoms? Where do you think there'll be the most scope for a DePin, potentially an area that's not yet being explored, or an area that's in its infancy?
It's already being explored, but decentralized compute is going to be a massive one. You're already seeing one of the first decentralized compute treasuries through Aether happen on the stock market. A company just bought $344 million, worth of Aether compute. So that's just completely massive. So I think decentralized compute, gaming, which kind of falls into decentralized compute a little bit, I would say are massive sectors that DePin can easily disrupt and make more efficient. Another one, I don't know why I'm blanking on this. Obviously, AI and robotics. Like I would say, AI, robotics, decentralized compute. Those three sectors, insane opportunity for DePin in those. Just massive upside. Being able to scale out a network as fast as you can with DePin will allow so many different types of businesses to thrive and pop up, which will kind of stimulate competition, which will help lower prices, for everyone. So essentially, you're creating a more efficient product at a cheaper price than a centralized entity could.
Yeah, and that sort of build out. And I think AI is really interesting because I think one of the issues that I have with AI and sort of the way that it's going is it's very concentrated from a monopoly point of view. It feels like something that shouldn't be monopolized, but is being monopolized. Obviously, we see OpenAI doing all these very ridiculous deals, but that's a one for another day. But I think certainly opening it up to that sort of decentralized nature and opening it up to the everyday person to get involved and to profit off of AI outside of just equity exposure, I think is quite interesting.
Yeah, you decentralize control too. Like you make it a lot more transparent, decentralized control of this thing, and make it inherently more secure. So like a data breach is way less likely to happen on a decentralized network than something with OpenAI, which we see happen all the time, right? You see these data breaches happen constantly where your password's leaked, your email's leaked, your payment information is leaked, all this shit happens, and then bam, you got to restart, go from ground zero, change your password, yada yada yada. GPU network, like that's less likely to happen. You have cloud storage networks too, storing data centrally. I think there's just so much massive opportunity and massive upside because it's such a better option. It is a more democratic option. It is a safer option, as opposed to trusting these big tech firms who have just screwed us over and over again. Google screws us over. Facebook screws us over all the time. Like they constantly find ways to fuck us over. And Uber too. Like, so Uber's a really good example. So like Uber was kind of like I won't say the first DePin, but they used a DePin-esque method to scale their network, right? Lyft too. They incentivize these people to use their own cars that they paid for to add to the network and provide a service, right? And they get paid for said service. So kind of a DePin in a sense, right? But the problem with that is these people weren't paid equity in the company. They're
No.
paid cash, right? And so these people have no inherent control over how the company is run, which is good and bad, you could argue. I mean, granted, you have like business savvy people who are able to make, high level, not high level, but low level decisions, very sophisticated decisions, and operate very efficiently in those
Yeah.
environments, as opposed to just having Joe Schmo like me make a massive decision and fat finger it and go, oh shit, I fucked up. I didn't mean to press yes or no on that. So there is pros and cons, of course, but essentially Uber messed up where they didn't give anyone equity. They gave them cash and less control in the company, less stake in the company. And over time, their purchasing power and their revenue erodes because not only do they not get equity, but they also Uber's a centralized entity. They have employees to pay. They have they have a lot of corporate fees, essentially, basically just corporate expenses, if you will. And so they have to pay their executives too. So the revenue instead in an Uber model, it funnels upwards, right? It goes from the people out here and funnels upwards, and the people down here all get scraps, So Uber drivers make like 35 or 40% of the ride fare or ride share, or whatever it is. And that's been going down. They used to make 60 or 70, and it's been going down and down, further and further. So they're getting more and more screwed over. Whereas in a DePin model, all that revenue, instead of funneling to the top, would funnel outwards to the people. And so these people driving their cars would essentially earn, 70%, 30%, not 30%, let's say 70 or 80%, with 30 to 20% going to the protocol to, manage expenses there. But since the protocol is decentralized, you have less inherent expenses there and less need for revenue to funnel upwards. And so, yeah, you cut your revenue down as a central player in the DePin, but your network scales infinitely faster. And it's a lot more fair to the constituents involved. So now all your drivers are satisfied, they're happy, and now you're going to get a lot more. You're going to get higher quality service, but you're also going to get more and more service, more and more resources out of it. So it's just a win-win-win situation, And I think that using the Uber example helps a lot of people understand how DePin is a better version of that.
Yeah, because there was a book that I read back when I was in university, I believe. It was called like The Platform Revolution, where it talks about the rise of these platforming business, where it's not so much what you have under the hood. It's more that providing that service application. So eBay was probably the best example of like the first real sort of platform economy. They don't really offer a service outside of just indexing people trying to sell a service, people trying to sell a product and connecting that buyer and sort of that connector. It feels like a key element of DePin is almost sort of providing that middleman, but making that middleman very independent in the platform service.
Yeah, that's pretty much what DePin is. I mean, you have people running their own small businesses on there, and that's kind of the future of the economy in my mind. Is especially with the rise of AI, autonomous robots taking jobs and everything, you're going to have a need for people to really, involve themselves in the economy, and they'll do that through becoming a small business and interacting with these DePin protocols.
Yeah. I think on that then, so how do you see the world of Web3 DePin interacting with the traditional sort of Web 2 world? How do you see that potential movement?
I think we're going to see a lot of it happen where a lot of these Web 2 companies will be either utilizing DePin services extremely heavily, similar to what AT&T is doing with Helium, or we'll see them buy out these DePins. And what I mean by that is like a DePin network will have grown. These central corporations will see, oh shit, that network's really strong, and I want to co-opt into my business. They'll either buy a large stake in the company or the DePin, or they'll just outright own it, which obviously brings cause for concern, because now you have a centralized entity owning, this company now, or this DePin, if you will, and they could do whatever they want with it, And so how is that going to look? How is that going to affect the future of DePin? I don't know. But I definitely suspect that maybe some buyouts might happen, maybe not. My hope is that you have a co-opting of services, again, similar to what AT&T is doing with Helium. My hope is that you have these big entities become customers instead of owners of the protocol. But I guarantee, or almost guarantee, that some of these protocols will be owned by big corporations.
Yeah, almost sort of like getting fingers in the pie. But it's all, you could argue we sort of see similar in the market now anyway, with that growth of M&A, not MMA, that has grown quite significantly. But that M&A perspective of you're seeing like smaller businesses come up, they pose a threat to the larger business buys them out, and so forth. And that then in itself almost spurs more innovation on that side, because it offers that end pathway outside of the revenue. So it plays on both sides. I think certainly it could act as a driver of DePin as people see that exit route. But then also, I guess, from the ethos perspective of, at the end of the day, you're doing it to sort of stay outside of the system. But yeah, I think it's quite interesting.
Yeah, I see some questions in the chat here too from Steve.
Yes.
So can Bobcat Miner 300 be flashed? I'll say this: I didn't get involved with Helium back then, but I'm like 99% certain the Bobcat Miner does LoRaWAN, and Helium no longer does that. So Helium has an IoT network, and they have the 5G wireless network. So the Bobcat Miner is probably useless at this point for Helium. Now, granted, can you use it for something else? Probably. I would imagine there's something else you can use it for. But the Bobcat Miner is, and that's something that, Helium had to iterate through, right? Like they've been around for a long time. They've been around for 7 years, and they started off with something, didn't work. Tried again. Started off with another thing, didn't work. Tried again, and now we're like on the 4th or 5th iteration, and it's finally working out. So, kudos to them. I know they left a lot of bad tastes in many mouths, but I honestly think they just tried. They shot their shot, and tried their best, and now we're here. So yeah, Bobcat Miner, not too entirely sure about. What do I think about DePin cloud storage? As I said before, briefly touching on it, I'm super bullish on it. I mean, the need for compute and storage is just going to increase. It's going to get more and more. It's not like, if you think about a future 20 years from now, do you think we'll have more data and storage needs or less? Right? I think we'll have more.
Yeah.
It's a more technological future. So just using that logic, you can make sense of the fact that, cloud compute, cloud storage, in the DePin senses are very valuable technologies. So I'm extremely bullish. There's a number of protocols out there like Filecoin, DNet, of course. I can't speak to which one I'm super bullish on because I'm still doing my research on that neck of the woods. I know a lot about those, but there's different facets to them that if I went down the rabbit hole on in this video, we would be here for a while. So I'll just save that for another time. But my concerns with cloud storage, though, are definitely legal issues, legality, because this is a good point of view. I'm not going to try to throw our stream off here, but let's say someone has CP. Let's say someone has some CP on their computer, right? Or let's say they store it on a blockchain decentrally. And now like 50 people have like one piece of the CP, decentrally stored on their servers, and they're getting paid for it. Of course, that's how decentralized storage works. Who's at fault here? Are they all liable? Can they all go to jail? Like, it's like, those are the things I think about, where it's like, oh, if you're storing something illegal, now this becomes an issue where like, who's at fault? Who's liable? How do we verify the storage while still preserving privacy, right? Because let's say you implement a protocol on your decentralized storage network where I can scan everything and copy it and check it for legality, every time you upload it. Okay, well, that's not really private.
Privacy at that point.
Exactly. So that's not really private, right? So we have to find a balance here where there's there's liabilities in place, like proper liabilities issued out to the people who are like, if I store something, I need rules in place that say I'm the person that's at fault, not the people who are storing my storage. That's the only issue I have currently. That's the only kind of nitpick I have about decentralized storage. But other than that, I'm super bullish on it.
Yeah, I think on cloud storage, actually, so building on that, certainly one of the interesting narratives that I think that we see in cloud now, well, there's the two elements, is you see sovereignty and the role that plays. Obviously, data staying in the country that it originates in. I know That's not so much a problem in the US because I think most of your data is stored onshore anyway. But certainly in Europe, that's been sort of a key factor, is having that sort of sovereignty, particularly if you're dealing with government contracts. But I think we're seeing it more from a business point of view, is the risks of offshoring data and the role that DePIN can potentially play in sort of bridging that.
Yeah. What was the question? Sorry.
It was around sovereignty, and how much do you see like the cloud sovereignty question playing in a DePIN space and providing some opportunity?
So like country to country, like, is
Yeah,
that what you
yeah.
mean?
So yes, yeah.
So, I mean, the thing with DePIN, right, is it's got no borders. So, like,
Mm.
as long as the network scales out accordingly, and there's like proper regulations in place or similar regulations in place accordingly, you across the globe in those sectors where there's lots of storage, you have almost equal opportunity. Granted, there are places in the world that don't have access to internet or solid internet, or they're not as technologically savvy as places like China, China or America. And so I think, those countries like first world countries are going to have a leg up, of course, in terms of, building out these networks. But then you have companies like Daba Network really fixing that, or at least trying to tackle an issue like that where there's not reliable connectivity in India, internet connectivity. And so they essentially become the base layer for these DePINs to operate on, because now they're creating that decentralized internet connectivity that's getting fast 5G, speed levels in internet quality to these residents, Indian residents, Indian citizens. And now that there's an infrastructure in place, a base layer internet infrastructure, you can build other things on top of that, like decentralized storage. So when it comes to sovereignty and whatnot, I think that in terms of control, in terms of where a lot of this stuff is going to happen, you're going to have a lot of these first world countries have the first mover advantage, but over time it should equal out if those other countries can catch up, thanks to things like Daba Network. But I don't really foresee that being a huge issue. Again, as long as the proper regulations are in place in each country, of course, which obviously, let's hope to God that's the case.
Yeah. Yeah, because the other certainly the big trends from an industrial point of view that we're seeing is more of that sort of moving stuff closer to the edge, and how DePIN can potentially help bridge that gap. Certainly, like once you're using, particularly some around AI and automation, is the certainly from a time lag perspective, I know that's something that AWS are pushing quite hard. Is if you're, say, a factory working autonomously, the key is having all of your data as close to the point where it's needed as possible, and how the role of potential DePIN startups can target those areas, whether it be like a DePIN facility near a manufacturing plant, that the manufacturing plant can offload its AI and cloud areas.
Yeah, I mean, latency has been a huge issue. Latency is a massive issue, which again, decentralized compute pretty much, it's solving currently. Like if you have like cloud compute happening on these centralized servers, you're going to have a lot of lag. Like if I play a cloud-based game right now on my PlayStation 5, there's a little bit of an input lag, right? But now if I incentivize, let's say I see a lot on my DePIN network, there's a lot of traffic for cloud gaming in one area. I can now incentivize people in the area and say, hey, there's a bonus multiplier happening right now for node operators that operate their nodes in this area, to create less lag for those paying customers, right? Because they're willing to pay more, or at least the service is. So there's ways to fix that pretty quickly. And when it comes to latency, and I think DePIN again is just another great way to do so. There's another company that I'm working with, or I'm talking with. I know the owner really well. The founder really well. Ken Anderson. I believe his last name's Anderson, but he runs Tashi Network, or he's helping run Tashi Network. He's the CTO of it. And Tashi Network, or Tashi Protocol, if you will, they might have rebranded recently. They're a DePIN for gaming, and their whole thing is they want to create a serverless game infrastructure. So there would be no more game servers; it'd all just be peer-to-peer, all thanks to DePIN. And so you have node operators almost everywhere running simultaneously, running these pseudo servers, if you will, and connecting gamers in these lobbies. And you basically remove the need for centralized game servers, and that almost totally removes latency, near zero latency, near zero lag time, and becomes a much more equitable way to participate in the game, these game infrastructures, and cheaper. It's cheaper to use too, and games can live forever because of that too. Because now you don't have to pull the plug on these live service games. You can just have games live forever in the ether of Tashi.
Yeah, and it almost breaks down the barriers to those launching new games. Obviously, as we've seen, the barriers to entry of creating games have come down now, particularly sort of with the white labeling of engines like Unreal Engine, etc. That, I think, bridges the other gap of being able to offer multiplayer without having to use centralized servers.
Yeah, no, I completely, 100%. Yes, you're spot on. You're hitting the nail on the head.
Yeah. Okay, it's quite interesting. Like I said, I'm pretty gobsmacked. I think in terms of risks on the horizon, then, for the proliferation of DePin, where would you say things to keep an eye out, things to watch for, what potentially may come down the road, whether it be regulatory, whether it be technical?
The only concerns I have right now for DePin, one used to be more regulatory. So what I mean by used to be was, we had that recent thing with the SEC, of course, in America, where DePin tokens essentially aren't recognized as securities by the SEC, which is massive. It's just like that's another step towards like clarifying what these things are and making markets more efficient. So that's one thing I like to see, because innovation can now spur a little bit more faster, and people can, breathe a little easier. Founders can start building, focus on building as opposed to dodging jail. So that's one. I would like to see that across the globe. Obviously America's, a massive player, but I understand there's a whole world out there. And so that's one thing I would like to see, is more clarity on the DePin regulation side. But two, I would say what really concerns me about DePin in the current state it's in is tokenomics. How to adequately give value to participants in your network without diluting older participants in the network. So because in DePin's current state, if you're an early participant in something, you're typically rewarded very well, and as it should be, right? You're taking on a lot of risk, of course. But as time goes on, you become diluted. Like your rewards become diluted, not proportionate to what value you're adding, because you're paid in these tokens, these speculative tokens. And of course, there's massive sell pressure on there. But so the question becomes, if you have a cash paying customer for your service, let's just use Helium, for example, as AT&T is paying cash for this service, how do you then funnel said cash adequately to your network participants? And currently the standard model has been buyback and burn, where, let's say AT&T buys a bunch of data credits, Helium takes those data credits, they take the cash, they basically buy a bunch of Helium tokens and then burn them out of existence, lowering the supply to help fight against token emissions, theoretically, making the supply deflationary, making it more scarce, which should in theory raise the price, right? But the problem is we're not seeing that. We're not, exactly, that we're not seeing a gradual increase in prices. We're seeing a gradual decline in prices. And so there's been a lot of talk as to what the new tokenomics model should be. And I'm all for trying different things. I'm all for DePin's trying to discover what the right answer is. I don't have the right answer. I wish I did, but that is my main concern right now with DePin. Is I think we're in a really good spot regulatorily, especially in America. Technologically, I think we're in a great spot. Use case wise, I think we're in a great spot. But we're transferring value proportionate to the value being provided by each network participant, transferring that value to them in an adequate manner, is something that I feel like is the next stage, the next struggle that DePin is trying to overcome.
And I've never been a fan of buyback and burn. I think it's an interesting one, because we see buybacks, certainly from a stock market perspective, buybacks originally started there because companies had A, more money than they knew what to do with, and B, it's a tax advantaged way for people, because then it falls into a capital gain rather than an income. The bit that screams out for me then is almost sort of offering like a dividend type of element to it, and whether you would then use send money across the chain and do it that way and incentivize holdings like that. Obviously, that's a lot more costly when you're distributing across chains, etc., until prices come down. But that's always been the way that I foresaw it more than buy and burns, and I don't think we see much of that in crypto. That sort of more traditional dividend type of payback. It's always been more buy and burn.
Yeah, and it's interesting you bring that up because that's conversations I've had a lot with people. Kind of to bring back Ken from Tashi. We had an amazing conversation with him in Singapore for our episode with I host a show with Daba Network called DePin. It's a Wednesday space. It happens every third
Check it
Wednesday.
out. Check it out.
Yeah, right. Wednesday at 3 p.m. Eastern on Twitter. And Ken's one of our regular speakers on there. And so we had him live on the show in Singapore. We did a live recording. So that was really fun. But he mentioned that. He talked about how, like, what's the right path forward. And he's not a huge fan of buyback and burn either. And so what he's doing with Tashi is actually just creating stronger incentives around the token so that people are less incentivized to sell the token and more incentivized to hold and stake it. And that's pretty much his answer, is to create a system, create a tokenomics model that makes it so your token is, people don't want to let go of your token. You want people to hold on to your token instead of trying to just make this artificial buyback and burn situation. Oh, not artificial entirely, but instead of trying to pump the price by buyback and burn. So that's really, really interesting. You brought that up. Another point you brought up, which I've talked about before on Spaces, is kind of like a DePin dividend, if you will. So at what point does a DePin network, instead of paying people in tokens, start paying them in stable coins, right? Because I feel like that'd be, as long as you have the liquidity available, I feel like it would be an adequate way to transfer value one-to-one or nearly one-to-one.
Yeah.
Whereas, like, if I'm a Helium hotspot miner and let's say I offloaded 500 gigabytes of data for AT&T this month, I should be paid accordingly to what they're paying. If they're paying 10 cents a gigabyte, I should be paid the 10 cents a gigabyte, via stablecoins. I think that's or at least like maybe 80% of it or something, like depending on what Helium's take is. I think that's an appropriate way to handle it. Obviously, it makes sense to me. It's one-to-one. But the problem with that DePins run into is they can't do that initially because there's no money coming in. There's no revenue. The whole point of a token is to incentivize people with speculative upside and say, hey, listen, this is a very early concept. Here is equity. Here's like pseudo equity in our company via a token. And if this thing blows up and starts making money, the idea is the token should grow in value. And so you as an early participant will then be rewarded for it. So at what point of maturity does a DePin say, okay, wait a minute, are all of our current users, all of our current token holders are now being diluted because the network's growing too fast or it's growing too much and there's too many participants. So now we should start transitioning into a stablecoin model where, maybe we start cutting off emissions of the token and then you attach a revenue aspect to the token. So I brought up the idea of essentially this thing called a DePin dividend, where you basically stop emissions of the token completely. And you say, okay, on this day, on like October 15th, so tomorrow, we're going to stop emitting, Will token, Ross token, ROSS, that's my last name, Ross token. Because the network has grown sufficiently enough. We're generating $30 million in revenue annually. And it's fantastic. We just want to say we really appreciate all of our token holders, all the people who have bought these devices and spread the network. It's so awesome. But we want to start proportionately passing down revenue one-to-one to what you're providing, as opposed to just giving everyone a flat token price or whatever, or just flat token rewards. Okay, cool. So what do you do with the token then? Where's the utility in the token? Okay, well, one, you have governance, right? Governance is a main utility in DePin tokens, where me as a token holder, I can then vote on the future of the protocol through proposals, and thus have an active say in what's going on. So that's one aspect. But how do you make it even more valuable than just governance? Well, two, you can attach a dividend to it. And what I mean by that is, let's say, I'm making $30 million in this example. I can then take, like, let's say 6 or 7% of that revenue and distribute it evenly to all the token holders and say, oh, well, everyone can now get a 7% dividend attached to this token. So it essentially becomes an equity, a stock, if you will, with a finite supply. There's no more emissions happening. It's a finite supply. And now me as a token holder, I have a reason to hold the token for governance and dividend rewards, cash flow. Awesome. And then as a unit, as a node operator, if you will, I'm still being paid via stable coins, and I'm incentivized to hold my tokens that I've earned because now I'm getting a revenue boost based on my tokens I'm holding. And so now I'm not just receiving stable coins. I'm not just receiving, the value I'm adding to the network on this passive form. I'm also receiving extra revenue by holding these tokens, and I get to still have a say in the network based on the tokens I've collected so far. And so that model makes a lot of sense to me. Obviously, it sounds just like a security. Like it sounds like, hey, listen, there's a promise of profit here. But I think the future of tokens is that we take on more security-like features. Like it just makes sense, So that's my problem solver, if you will. It's kind of like my working concept. I have a friend of mine, Tyler. I'm going to shout him out. Unleashing DePin. Definitely follow him. He is probably one of the smartest DePin tokenomics people in the space. He releases reports on this, not on a regular basis, but ever so often. He has a new one coming out pretty soon, I'm pretty sure. So again, shout out you, man. Just definitely, be on the lookout for that. I think his what is his name? His name on Twitter is Unleashing DePin, but his tag is DePin Unleashed.
Okay.
Yeah, so definitely follow him. He's got a lot of great thoughts on this stuff. He probably studies DePin tokenomics more than anyone that I know. And so I trust his word on a lot of stuff. He's also one of my co-hosts on the DePin Happy Hour that we do every Thursday night. So if you want to listen to him, live, you can talk to him there. And he'll have a couple bourbons in him too, so he's pretty funny.
I guess the question that we didn't address at the start that I'd be quite interested in is, how did you get into DePin? Like, how did you fall down the DePin rabbit hole per se and get to the DePin digest and you're fingering all of these DePin buys? How did you A, discover it, and B, how did you sort of fall more into it and eventually start launching businesses in the space?
Yeah, so I am someone who, to kind of preface all of this, I'm someone who I tend not to kid myself on certain things. Like I get really passionate on things, but I've always been the kind of guy to where I can objectively look at something and say, okay, well, these are the flaws I see. And so when it came to crypto, I got into crypto back in like 2020, 2021. I'd say 2020 more accurately. I started buying crypto in 2019, but I didn't really get involved until 2020. And so I started like getting, falling down the NFT rabbit hole, of course, and getting involved with communities. And I liked the market dynamics. I liked art, of course, or whatever. I was in it for the art, right? That's what everyone says. But I did like the community aspect a lot. But there was always the inherent problem I saw of, okay, without this NFT, what are we? Like, what is this community? Why are we all here? We're all here to make money off each other. All right, cool. That doesn't last. I always told myself this is a thing that never lasts. Like someone's always left holding the bag, and this doesn't feel right, And so I found myself struggling outside of Bitcoin and DeFi to really find a use case for this stuff. I was like, okay, well, what is this for? Like, why do I even care about crypto anymore? Like, why am I even here? And then right around that same time, I discovered this app called Silencio. So that's Silencio. Silencio is a noise pollution measuring app on your phone. And I had discovered it with a friend of mine, Scott. We both kind of fell down the tokenized asset rabbit hole, RWA rabbit hole. But at the same time, we discovered Silencio and these other DePin projects before DePin was really a term. And I think it was around 2022, 2023, we discovered that. But I instantly fell in love because it all made sense to me. I was like, oh, there's a real use case being applied here. And it just happens to use crypto as an accounting and payments method. Interesting. I like this a lot. And so that was it for me. Like the light bulb turned on, the Lego pieces clicked, if you will. And I was like, oh, this is the sector I love. Like I instantly fell down the DePin rabbit hole from the Silencio app there on and so forth, discovered Peak, discovered IoTex, discovered Solana. I obviously knew of Solana before, but like to me, it was just a gambling casino until all these DePins started building on it. And from there, I went all in, man. I put all my chips on the board on black, if you will, if DePin's black here, and said, hey, I'm doubling down. And as I've prefaced with this conversation or with this answer, I am a very objective person. So I understood like the risks. I understood like, some of the flaws, but the pros outweigh the cons in this case. And so that's why I'm so gung ho on it, because one, it makes sense, but two, there's a passive income aspect to it too. I can essentially financialize my life with DePin. And I'm a lazy motherfucker. So I do not, I like to work, but also I like to chill. I like to lay out in the sun with my dogs, hang out. And if I can earn revenue passively, like reliable revenue passively by setting up these networks and being a network participant and earn it somewhat pseudo passively, I'm all game. I'm all game for that. Like I like trading, but trading's active, dude. Like it's like I have to stand up, stare at my computer, make decisions actively. And I'm like, shit, dude. Like I'd rather just set up a hotspot, know I'm going to make $500 a month on it, and say, "Oh, I'm call it a day. All right, see you later." Like I'll check on it in a month. Goodbye. Like that's pretty much how I got into DePin, how I got started in all these different business ventures. I got started into making content for DePin because there was this massive gap in education and understanding of what DePin was or is. And people just the concept never really clicked for them. And so I've always also been a guy who's objective, but also I think I call it monkey brain because I think I'm an idiot, where it's like I can think like an idiot and relay information to idiots, but I'm also a little bit smarter than an idiot. So I can like understand complex ideas and break them down into simple terms and go, oh, this is what he means. Like, so if someone's like speaking like large paragraphs of technicality over here, I can take that and go, oh, I get the main points of this, and then just translate it to these people. And so I pride myself on that ability. And so I started making fun, silly content because there wasn't enough of that style of content in DePin. And these companies fell in love with it, Granted, I haven't made that kind of content in a little bit. I'm trying to get back into the flow here. I'm just extremely busy now. But I pride myself in the fact that I like to be funny, but I also like to translate these complex, very important ideas to people in a very simple manner. Like when it comes to Aoki, for instance, I made a bunch of content about Aoki by dressing up as a robot on my videos and just like acting dumb and being like, oh, this is like your Aoki, but this is your robot before Aoki. And I'm like blind and I can't see anything. And I'm like running into walls and shit. And it's like, oh, this is your robot after Aoki. And I'm like perfectly walking through walls. And I'm like grabbing stuff and being super like efficient. And it gets the idea across, right? It's funny. You get to see a fat idiot like myself walk around and do stupid things and say stupid things. But then you like see the concept and say, oh shit, I know exactly what Aoki does now because this robot's smarter because of Aoki.
Yeah.
Got it.
Yeah. Yeah. It's the best way to communicate. I think one of the key underrated skills is being able to communicate complexity in a very simple to understand point of view and also to tell the story around it. And I think certainly that's something that certainly the crypto space lacks, is people who are able to tell coherent stories around what is quite a naturally complex area in a way that the everyday person can understand. Outside of, you sort of almost get people coming into the crypto either through the meme coins or through the promise of they could just buy something, forget about it, and it's worth 10 times that in a month. Or they come in and think I can just leverage trade.
I love the argument of like, oh, when's Dogecoin gonna hit like $10?
Yeah.
And I'm just like, dude, do you even know what market caps are?
Yeah, exactly. But it's that understanding of how can I understand a really key underlying concept, but in a quite simple way. I think even blockchain as a whole, as a topic, I think is something that there's a lot of people in crypto who couldn't tell you how a blockchain works or what it does. They just know that they buy a token on Coinbase, it goes up, or that they go on their exchange, they click 10x, they put whatever in, and they trade it.
No, Wizard, 100x. Come on.
100x, ramp up the leverage, but it's understanding sort of what this space is actually created to do. And I think that is a real fundamental gap that we see.
Sorry if my dogs are barking. You can hear them in the background. They're freaking
out. Particularly, I think in the world of DePin, obviously it's relatively new. I think DePin is something that wasn't really talked about last cycle. We see it a lot more this cycle, and sort of that prevalence. And I think it's quite interesting to see something taking the load off DeFi. I think we're seeing more RWA and we're seeing more DePin. And I think DePin and RWA almost overlap quite a little bit in some aspects. I think there's a lot of RWA that can play a part in DePin and a lot of DePin that plays a part in RWA.
Yeah, 100%. 100%.
and
I mean, that's the whole thing is, again, it's real use cases, right? Wizard, it's real
Mm.
use cases. Like the whole thing is like before DePin, like blockchain became before DePin and RWA, blockchain was this abstracted idea, is this very abstract thing. It's the same thing with finance, like I equate it to people's understanding of the stock market. People don't get the stock market. They don't understand the stock market. Like they don't understand investing. They're like, oh, that's just like an ethereal thing. That's like a very like, oh, like it's just kind of this thing I don't understand. You buy company shares, whatever. Wizard, I have loads of DePin units if you want
Yeah,
to buy.
Steve trying to offload his DePin stuff to me.
He's trying to offload.
I
Yeah, he's
love
trying to
it.
offload, man. Data offload. But yeah, like DePin isn't that ethereal idea. It's not this abstract thing. I can relate DePin to someone, and it's it solves a real problem that they have and that they face every single day. And like I just keep referencing Helium, of course, but like the cloud compute DePins do the same thing. Storage DePins do the same thing. Wingbits does the same thing. Like who doesn't want more, accurate GPS data? Like how many times have you tried to use a GPS somewhere in the middle of nowhere and it just doesn't fucking work, right? Or like Helium's case, like how many times have you been out or inside a building, or you're out and about in a dead zone and there's no cell phone service? Like that sucks, right? Everyone can relate to that pain. And so when you touch on that pain point, that's super relatable. You can then sell them a service or a product that they can get. They can understand the idea of, because now it directly addresses that pain point in their life, as opposed to saying, hey, download this app and buy this token and risk your hard-earned money so that you can gamble and see if you can make some money.
Yeah, it's really interesting. I think I've got so many more questions, but I'm conscious that we probably need to wrap up soon.
You can get one more. You can get one more question.
Okay. I think then, circling back, anyone watching, if you were interested in A, learning more about DePin and some opportunities, and B, getting more involved in the space and potentially launching businesses, how would the everyday person who isn't in DePin go about learning about DePin and potentially launching businesses in DePin?
I'm gonna do a soft shill here.
Chill away.
Yeah, one, make sure you're following me. Not only me, I have a group of people you should follow, but make sure you're following me. I post a lot of updates on DePin. I have a DePin deployment series coming out soon, where I'm gonna actually be filming, like me and my partner going out talking to business owners. How do I talk to them? How do I pitch them an idea? How do I install this thing? And so on and so forth. So definitely do that. But two, I would say do two more things. One, follow the DePin digest. We're going to be posting a lot of articles, like educational articles on DePin on our website. But we also post DePin news every week. So if you want to get caught up on everything DePin, we send a newsletter straight to your email every single Friday morning. And then I also post a video every Monday going over the newsletter, like the top stories from the newsletter. So definitely do that. But then, three, I would just watch the DePin happy hour. We go live every Thursday night, 8 p.m. Eastern, here on Twitter. It's me and 5 of really good friends of mine, 4 other people, really good friends of mine, who are deep in the DePin space, for lack of a better word. No pun intended. We're all like involved in different sectors in the DePin space. We're all involved at different levels. And we just have super real takes on there. We have a couple cocktails. We talk a bunch of shit sometimes, but we're open to questions on there too. So if you go on there and go on the chat and ask us a question, we're going to answer your question. We're going to be more than happy to answer any questions you have. So if you're ever curious about something or have a question, shoot me a DM, go on the live stream, shoot us a message on the live stream, but also follow the DePin digest, because we're going to be posting lots of educational content on there as well. And I'm going to try my best to make sure everyone knows about DePin, everyone understands it, and they can go about starting their own DePin businesses.
Yeah, fantastic. We've got one more question come in. What are your thoughts on Aether? I think we've talked a little bit about Aether, but
so Aether as a concept I really like. The execution, again, we touched on tokenomics, before, and I just think the tokenomics structure isn't adequately giving data to the revenue to the node operators. Or you're not adequately sending value to those people running your network. But other than that, the network effect Aether has, so all the compute they're doing, all the deals they have, the recent treasury that was announced, the $344 million treasury that I forgot what the company's name was, but they're basically buying a bunch of compute in Aether. I think Aether is a really solid project. I think Aether token will do well. once tokenomics are figured out for a majority of DePins, once they get past the buyback and burn model that clearly hasn't been working as well as it should be. I think, yeah, Aether's a solid project. I like Aether.
Yeah, fantastic. Right, I think wrap that up there. It's been a long day. It's 7:30 at night here now, and I'm starting to get a little bit peckish. It's been sat at the computer.
Peckish? You're getting peckish.
A little bit peckish. I've been sat at the computer since 6:15. It's been a long old day, but yeah. I mean, if you obviously follow Will, follow DePin Digest, follow Wolf Crypto. I'm there every day, and definitely I want to have you on again because I've got a load more questions that I want to delve into. It's a really interesting topic. And
no, it's been a pleasure, man.
I'm pretty sure we could go down some rabbit holes.
We could, man. We could. No, I was going to say it's been a pleasure being on here. You can just hit me up, man. I'm more than happy to come on anytime, and we can talk more. We can do like little DePin updates if you want.
Yes.
Tell you what's going on in the world of DePin that day or that week or that month, and go from there. But no, thank you for having me on, man. It was a pleasure. I love having you on the spaces too. Definitely check us out in the spaces, guys. It's a fun time.
Absolutely. Thank you very much. Everyone go follow Will, follow DePin Digest, and I'll see you all later.